Earlier this week, we talked with Tina Barrett from Nebraska Farm Business. As we mentioned last week, the USDA is expecting a shift in profits this year between livestock producers and crop growers. The agency expects livestock receipts to increase by more than 15%, while forecasting a drop in crop receipts of 7%. Overall, the USDA is projecting net farm income at $113.2 billion, down about 14% from last year. Tina talked with us Thursday about the sales tax exemption for ag repair parts, cash rental rates, and if she was expecting the same divergence in profits between the state's livestock producers and corn and soybean growers.
We do. We see that definitely coming, and partly because we have a very heavy crop influence in at least the producers that we work with. We certainly expect incomes to be down.
Let's talk about livestock producers, specifically beef producers who have done really well over the last few months, and cow-calf producers will also do well. What kind of tax things does that, and then disaster payments, do those bring into play?
Right. So the cow-calf, the livestock guys in general are dealing with what the crop guys have dealt with for the last 5 years, and the tide has finally shifted, and they're getting their turn. But it's going to mean that tax time is going to be a little more painful than it's been in the past. And the last month or so, we've been hearing that there's been a lot of disaster payments being received from 12, 13, and 14 from some of the drought issues that they had. And the problem with that as a cash basis taxpayers, that's all taxable this year as well. So so they're dealing with these great prices and income that should have maybe been received in the last couple of years. And so they're going to have a lot to deal with. And certainly things like income averaging is going to help, but they better be prepared for some higher tax bills, which is a good thing in the end.
Flip side of that, the crop producer is probably not looking at that high of incomes, especially compared to normal this year.
Right. For what they've been experiencing the last 5 years, this is going to feel a little different. It's going to feel a little better at tax time, but again, it's not a time to ignore tax planning or anything like that. And I have a lot of producers who aren't wanting to let go of that grain at these prices, and I understand that, but it's also really expensive to create a loss on your tax return for the lost things that you could take in. And so it's really important to make sure they get into that tax preparer and take a look at that, even if they feel like they don't have a tax problem this year.
And was a lot of profit carried over, a lot of revenue carried over as well?
I think, we've been seeing growing inventories over the last 5 years for the crop guys in huge ways. And so they may not see a huge difference, especially where at this point in time we don't have a high cost of or a depreciation expense from Congress yet. Keep saying that it's coming, that we're probably going to get it, but this will be the first year we don't have the ability to write off a large sum of money and capital purchases. And so between the two things, cash incomes might actually be still pretty high this year for some crop guys.
2015 is obviously a question mark at this point, but do you expect costs to go down at all?
I haven't heard of any costs going down. I think one that everybody needs to be aware of is cash rents, and especially those rents that have gone up rapidly over the last couple of years. I think both tenants and landlords need to take a pretty tough look at those and figure out what they're going to do, because from a farming standpoint, the profit's just not there. From a landlord standpoint, though, their costs are going up because real estate taxes have certainly risen quite rapidly as well. And so, both parties need to be aware of how the other's sitting. But for both of them to be in their best place, each of them need to make some money. And so, sitting down and figuring out what the right number is going to be tough, but it's going to have to be something that's done.
You wrote a Cornhusker Economics article soon to be released on the sales tax exemption. Explain what that means.
Yeah, so the state legislature this year passed a bill that allowed repairs for farm equipment to be exempt from sales tax. It hasn't been that way in the past. Doesn't go into effect until October 1st. So we've got a little bit of time yet to continue to prepare for this. Basically what it means is any equipment that's used in the production of agriculture, whether that's cultivating and harvesting crops or producing animal products, any repairs on those equipment now will not have sales tax on them. As a producer, you're going to have to provide your vendor with a Form 13. You can get that from the state's website. It's pretty easy to get to. And once you give it to them, you can either do it on an annual basis or give them a blanket exemption that you have to revoke in writing. So most people will just give it to them once. They'll keep it on file. That's not necessarily everything that you use for farming. It's very specifically for cultivating and harvesting crops. So four-wheelers, even though they're used in your business, aren't exempt from sales tax, either when you purchase them or the repairs on them. So there's some things that are going to certainly have to be figured out in there.
Tina's Cornhusker Economics article on sales tax exemption can be found through a link on the Market Journal website.